Guys, Nvidia just had some crazy major news with Dan Ives going over to Asia and revealing what is happening with AI chips. Nvidia has taken investors on an absolute roller coaster of a ride. Just look at the 1 month performance. This stock has had absolutely zero 1 month performance. However, it has literally been a roller coaster ride from going from $147 per share down to like 117, back up to about 140 per share. Dan Ives went to Asia to reveal how disruptive AI technology is advancing, and in this video, because I respect your time, let me give you a quick summary before I go into all my research. So here's the fastest summary that I can come up with for the entire video. Dan Ives' Asia trip confirms that growing semiconductor demand is 12% to 15% increase in the past 3 months. He expects Nvidia to have a market cap of 4 trillion or 5 trillion very fast. AI capital expenditures or CapEx is accelerating across both tech companies and enterprises. Dan Ives predicts 25% growth in tech despite concerns over tariffs and stretch valuations. My personal conclusion is that I'm buying more Nvidia. I said that Nvidia was a phenomenal purchase under $120 per share. I'm buying Nvidia hand over fist, bicep over tricep. And what I'm specifically doing is I'm going to be buying some leap options, but I'm going to be using calls to reduce the price of my leap options. And I'm going to be showing you how to open, close, and manage leaps in this video as well at the end. Last but not least, I do have a webinar this Saturday on leap options and 7 different leap option plays I'm making for 2025. So in that webinar, I'm also going to go over opening, closing, managing, and 7 opportunities, as well as answering questions in that webinar that's going to be this Saturday. You can check out the first link in the description. That's a summary. Now let's watch what Dan Ives had to say about Nvidia.
I guess maybe just to start things off, tell us what you're seeing on the ground there as it pertains to demand for the semiconductor space.
Yeah, I mean, since October, we're seeing about a 12 to 15% increase in terms of demand. And that's significant, clearly a good barometer going into NVIDIA next week. But I think it just shows these enterprise use cases are exploding. And that is really accelerating demand because no one wants to sort of lose their spot in line. And I think that's just more and more bullish for the AI revolution, the second, third, fourth derivatives. I mean, that's so far from our trip, very, very bullish and feeling really good going into NVIDIA next week.
Is NVIDIA still a top pick for you? Everything you're seeing there just reinforcing what you like?
I think it's a table pounder. I think it's going to be a $4 trillion and eventually $5 trillion market cap because there's only one red phone to call for these chips. It's the godfather of AI, Jensen NVIDIA. And what I'd also tell you, and we talk about in the note, from a DeepSeek perspective, 45, 50 enterprises, not one has changed plans post DeepSeek. I think it just shows this CapEx doubling down. That's what we're seeing across, not just big tech, but across enterprise.
All right, to summarize what Dan Ives said, the demand for semiconductors has increased 12 to 15% since October. This is some massive news because in 3 months, a 15% increase is over 60% annualized increase per year. Enterprises are aggressively securing chips to avoid losing their spot in line, so there's a whole lot of demand for Nvidia. DeepSeek has had very little impact. We'll talk about that later on in this video. To me, this really signals a bullishness for Nvidia stock in general. I mean, look, Nvidia has had a really rough ride, and I said that this stock is incredibly cheap, under $120 per share. You can see I'm currently up $15,000 just on the options themselves, and I do have 7 figures in Nvidia. My 1-month performance in my portfolio is just over $300,000, and I'm sitting currently at an all-time high. This is due to Nvidia, Palantir, and other stocks that I cover on this channel, of course. For me, this news that I saw from Dan Ives really confirms that 2025 is a fantastic year for AI as predicted, and we're going to continue to see bullishness in tech stocks, specifically Nvidia. Dan Ives says that he sees 25% growth in 2025 for tech stocks, and I can't have more agreement for this. I think tech stocks particularly are undervalued right now because all the money that is coming from retail investors, hedge funds, actually, let me show you right now, hedge funds are still buying Nvidia. You can see here how hedge funds continue to increase their stake. So Drive Wealth Management, you can see right here, they increased by 7.6% in the 4th quarter. So this is just one hedge fund, by the way. People are literally investing, dollar cost averaging, and purchasing more Nvidia shares because they see the opportunity in Nvidia. This stock currently right now represents the best risk for reward ratio that I have seen out of all tech companies, even better than some of the safer tech companies that I talk about, such as Google, Apple, Tesla, Meta. All of these companies, if you look at the risk to reward, Nvidia presents the best because they're the infrastructure of AI, the infrastructure. So other companies cannot scale without Nvidia. They are mandatory to other companies' AI advancement investment and their budgets where they're spending all their money is only going to one place. There's only one game in town here, Nvidia. The next thing that Dan Ives said, which completely shatters tariff concerns and explains the market dynamic better, which I personally have a very interesting take myself, as actually we need to watch this quick 60-second clip, and then I'll explain what my interesting take is on tariffs and the concerns and the risks, which is really important for people's risk management when it comes to Nvidia.
Where do you think AI, how much of IT budgets does it make up, and how much could it get to?
Yeah. I mean, Carl, I think that's why you look at names like Palantir, right? Kind of sort of the golden child in terms of use cases, monetization, as it's already playing out. We believe everything we're seeing, it's about 10% of IT budgets, and in some cases, 15%. Now, look, there are some enterprises and, of course, places around the world that are not going down the AI path, of course. But they're going to have to delay their initiatives for, I'd say, 12, 18 months, because right now demand's outstripping supply 15-1. And that's why I sit here and I think tech stocks are going to be up another 25% this year, despite tariffs, despite nervousness, worries about stretch valuation. I think Street is massively underestimating what demand looks like in this AI revolution, second, third, fourth derivatives.
And so if demand is going to be that strong, and you just mentioned tariffs, I mean, do you think tariffs are somewhat of a non-issue, meaning you're just going to pay what you have to pay because you need these chips to do what you've planned to do?
Yeah, and Courtney, you're talking about with Eamon before. I mean, I think this is all a poker game, right? And I think, it's very easy to get nervous in terms of first shots across the bow. I don't believe it's going to massively impact the chip and overall AI revolution. I think there's also going to be some, I think some gaps in terms of whether it's Apple, Tesla, potentially, some opportunities that they could ultimately not really even be impacted by some of the tariffs as this all plays out. But what we're seeing here in Asia, less nervousness about tariffs than maybe even 6 weeks ago. And that's bullish when you look at this relative to overall demand and what's going to really be a game of high-stakes poker between DC and Beijing.
You guys saw that Dan Ives basically said this is a whole poker game, okay? How is Beijing playing poker game with Washington, D.C.? How is America versus China in the AI race? And he sees that there's no massive impact on AI demand, and he just confirms that this is a further bull market. Now, what is interesting is that Asia isn't concerned over tariffs. He's over there in Asia. He's telling you firsthand, are you guys in Asia? No, if you're not in Asia, then let's take Dan Ives' word for it. He seems to be the most truthful analyst that has been on point. And for me, I have a lot of respect for his research, and it's very along the lines of my own thinking and what I've experienced when, in my college education, which I studied data analytics. Data is the oil. It's the new oil, guys. So when you're looking at Palantir, when you're looking at Nvidia, I'm looking at, do they have a data advantage? Because a data advantage is a competitive advantage. A competitive advantage means that you're going to beat all the competition. If you beat all the competition, you make more money than all the competition. If you make more money, then obviously your stock only has one way, up. It only goes up, right? So when I show you the chart right here, it looks absolutely delicious. This is delicious, like you put burrata on some toast with some honey on top. This is sweet, this is savory, this is juicy, this is everything. This is salty. This hits in every single angle because Nvidia has had tremendous support, and it's the delicious chart because it was going sideways. We had a double top pattern, and then boom, we had a crash. Then we had a double bottom pattern, and now we're back to business, baby. We're back to business, and the stock tremendously pulled up. And let me tell you, I'm not late on this. Take a look at my YouTube channel. On February 3rd, I said I'm buying Nvidia stock after DeepSeek release. I put this up on February 3rd. Congratulations if you're one of the 59,000 people that ended up watching this. If you're subscribed, you have notifications on. I told you February 3rd, I'm buying. Look at this. February 3rd, $116 per share. Are you guys kidding me? I'm putting guacamole in your pocket right now. I'm buying this bicep over tricep. I'm showing you how to get rich. It's literally the proof's in the pudding. I show every single receipt to you guys, my portfolio, the date that I upload my videos, because for me, Nvidia has been the most clearest trajectory to getting wealthy in 2024, and it continues to be the best way to get rich in 2025 as well. This stock has already created so many millionaires. You have to hop on. Now, of course, be smart. Use your risk management. Use options. I'm going to show you how I'm using options to hedge this position. But it's very clear to me. The opportunity is very real. From 116, I've already made hundreds of thousands of dollars on Nvidia stock alone. Now where I see the stock is we're above the moving average. We're in the middle of the Bollinger Band, but I still see the stock going up to $175 to $200 per share at, the end of 2025. We have like 10 more months or 9 more months. As long as it takes to have a baby, that's as long as it takes to basically make a whole lot of money on Nvidia. All right, so let's go over my Nvidia positions and let me show you what I'm going to do today and how I'm going to open up a new position on Nvidia. So right now I have a whole lot of options. I have these expiring essentially like ASAP tomorrow on 127, 130. I've been selling a lot of put options. I also have some poor man's covered calls, and that's, specifically I want to open up a position for you from scratch to show you how a poor man's covered call works from, open to close. So look, if you're trying to get Nvidia exposure without putting in too much capital, what you can do is you can go for a January 16, 2026 leap option. This is going to be way cheaper than just buying shares outright. My strike price here, I'm going to look for a 70 delta. Look at that. I didn't even, I just picked 125 out of intuition. It was exactly 70 delta. So that's perfect. So this right here has a premium of about $35. So instead of putting up 100 shares of Nvidia for like 13,900, why not buy a call option? That call option only costs $3,500. So you own the same amount of shares, you have 100 shares of exposure, and you don't have to put up, 100 shares worth of capital. That's what makes a leap options really powerful. A leap option is basically just a call option that is out, very far in terms of expiration dates. It's typically 1 year, and this option's, roughly 1 year away from expiration. So this is a fantastic leap option. So I'm going to buy this. And now, guys, what you can actually do to reduce the cost of a leap option, which is like the best thing in my opinion, is selling calls against the leap option. This is just similar to a covered call strategy. You probably see me talk about this on the channel before, but a covered call is essentially a strategy that creates income, and you collect premium selling call options and selling the upside of a stock. Now, why would you want to sell the upside of Nvidia? Well, because we're not actually going to sell all of the upside. We're only going to sell the very, very top end of upside. We're still going to get a lot of upside. We're just going to cut off from, some really, really high numbers. And I'll show you what that looks like, okay? So if I go to sell call option and I go for a shorter term expiration, let's say that I go for April expiration. This is, less than 2 months away. It's like, 6-7 weeks away. So if I sell, for example, here the 150, okay, in a short amount of time, or yeah, let's go for 150. I was thinking about doing 155 as well. The 150 has a 40 delta. The 155 has a 34 delta. You know what? Let's just go for the 155 because I am very bullish on Nvidia. So let's do that right here. So you can see here how the 155 strike, it has a delta of 0.34, and we're going to collect $560 per contract here. So what I'm doing, you can see here on the right hand side that I have purchased the 125 call option on Nvidia. That goes out till January. Okay, that functions as my base, as my shares for upside. And then I sold the 155 call option here, which reduces my price. It's a bullish strategy. And by April, I can essentially, make like $15 per share, okay, in upside, because I'm not going to get affected until 155 call. $15 of upside and a total cost of $29. I can actually make more than $15 because this option here is going to lose value through theta and time decay. I can essentially make over a 50% return. Now, I briefly want to say that I'm going to cover opening, closing, managing, right? I'm going to spend 90 minutes or more on this Saturday talking about leap options, how to keep your risks low with leap options, how to open them, which strikes to pick, what expirations to pick, and 7 different plays. This webinar is going to pay for itself many times over. It's the first link in the description. You have about 48 hours to sign up, and I'm going to be giving you guys a full masterclass on leap options, something that is going to be completely epic. Check out the first link in the description, sign up, and I'll see you guys on Saturday.